All right, today we're diving into a really fascinating company, PDD Holdings. And honestly, it's a total head scratcher. On one hand, you've got profits that are just going through the roof. But on the other, Wall Street is completely torn. It's this classic showdown between amazing performance and some pretty serious perceived risks. So let's get into it and figure out what's really going on. So, this is the big question, right? The company's numbers look incredible, absolutely fantastic on paper. But for every single investor jumping in, you've got another one hitting the brakes, saying, hold on a minute. So, what gives? What's happening behind the numbers? Well, it all kicks off with one pretty jaw dropping figure 46%. Let that sink in for a second. That's how much PDD's net profit jumped in just one quarter. I mean, they didn't just beat expectations, they completely shattered them. A number like that, it sends shockwaves through the market. And really, this is the fuel in the engine for everyone who's optimistic about this company. Okay, so let's first look at the bull case, the optimists. Why are some investors seeing that 46% number and thinking, this thing is a rocket ship? Well, for them, it's simple. They see a company that is just firing on all cylinders, and they are not afraid to bet big on where it's headed. When you break it down, the argument for being bullish on PDD really rests on four main things. First, obviously, is that insane profit growth we just talked about. Second, you've got the big money, major institutions buying up more and more shares. Then, for the chart watchers, there are some really positive technical signals. And to top it all off, its performance in the US has been just incredibly strong. And look, this isn't just talk. Let's get concrete and look at the numbers from just one day, September 5th. The stock went up, but the crazy part? Over $1 billion worth of its stock changed hands. $1 billion. That put it at 81st in the entire market for trading volume. That tells you one thing for sure. A lot of people are watching this company very, very closely. You know the saying, follow the money? Well, that's what's so interesting here. It's who is doing all this buying. We're talking about huge players like DNB and Nordea. These aren't just random day traders. They're massive, sophisticated firms. And when they start increasing their investment in a company, Wall Street takes that as a massive vote of confidence in its future. The bulls are also looking at the charts, and they're seeing something that gets them really excited. It's called a golden cross. Now, if you're not a big chart person, all you really need to know is that this is a classic signal for traders. It basically happens when the stock's recent momentum overtakes its long-term trend, and it's often seen as a sign that a big rally might be just around the corner. Okay, but that's just one side of the coin. Every bull has its bear, right? So now we have to flip the script and look at why so many other people are so cautious. Because despite all that great news, there are some pretty serious storm clouds on the horizon for PDD. And the case against PDD is just as compelling. For starters, you've got some very smart analysts out there who are actually downgrading the stock. Then there are these nagging questions about its growth, like can it really keep going at this pace forever? Plus, you can't ignore the very real legal and regulatory headaches that come with operating in China. And yeah, there's still some lingering doubt from short reports that have come out in the past. I mean, this just says it all, doesn't it? It perfectly captures how divided everyone is. On one side, you've got firms like Benchmark shouting buy, and on the other, you've got a firm like Newstreet Research looking at the exact same company, the exact same data, and saying, nope, we're downgrading to neutral. It's a total split right down the middle among the experts. So what's the core of the bear's argument? It really comes down to one word: sustainability. Can PDD actually keep this up? They're worried that as competition gets tougher, those juicy profit margins are going to get squeezed. They're asking the tough question: is this incredible growth sustainable, or have we already seen the best of it? And then you have to talk about the external risks, which for a company like PDD are a really big deal. You've got ongoing legal stuff that just creates a cloud of uncertainty, but the elephant in the room is regulation. PDD's home base is China, and that means its entire business could be rocked by new e-commerce rules that could literally pop up overnight. And of course, like any big company, a major shift in the global economy could hit them hard too. All right, so in the middle of this whole bull versus bear tug-of-war, there is one massive wild card, and that is Timu. You've probably seen it everywhere. It's PDD's international platform, and its popularity has just exploded, especially in the US. This could be the one thing that tips the scales for good. So what's the big deal with Timu? Well, it's just been performing incredibly well, even while the rest of the economy is kind of slowing down. Timu's revenue in the US just keeps on climbing. Now the bulls look at this and see proof of PDD's genius. But the bears? They look at it and see a massive money pit with a very uncertain future. So you've got these two powerful stories pulling the stock in completely opposite directions. Where does that leave us? What should we actually be paying attention to figure out which side is going to win this thing? It really all comes down to a few key things. If you're trying to figure out PDD's future, here are the 3 things you gotta watch. Number 1, those quarterly earnings reports. Can they keep putting up those blockbuster numbers? Number 2, watch what the big institutional investors are doing. Are they buying more, or are they starting to quietly head for the exits? And number 3, and this is a big one, keep an eye on China and any new e-commerce rules. The answer to each of these is going to be a huge tell. And this really pulls it all together, doesn't it? You can see it right here. The biggest driver is those strong earnings, but it's being pulled back almost as hard by that regulatory risk. Then you've got the analysts who can't make up their minds, and of course the Timu wildcard, all tugging at the company's value at the same time. Which brings us to the ultimate question. In the end, what's going to win out for PDD? Is it going to be its incredible, undeniable performance? Or is it going to be the market's perception of all the risks lurking around the corner? That's really the multi-billion-dollar question, and it's what this entire battle between the bulls and the bears is all about.